The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, we're back here Friday. This is Friday the 5th of February. My pleasure to be here. And this is quite some market. This is a challenging market in the sense that if you are intraday trading, there are huge moves up and down, which if you even get one of them, it really makes up for any mistakes. But it is so determined, the S&P futures are so determined to keep the daily grind of 20 to 30 points up and down within the same day, that we've just got a fascinating market here. Let's just go through the numbers. There's a chunk of things to discuss. I'm going to go right through it. The Dow is down 193. It was down 202. Yep. Now it's 190 at 16,225. This is kind of this is a pretty critical area. The S&P is down 27 at 1888. The comp index is down, as I see it, down 106. 4402. We'll talk about that as well. Not so good. The E-mini futures down, what have I got? 25 at 1882, testing this red dash trend line support. The weekly chart up until yesterday's close was actually looking quite good. Yesterday I had for my Chapman Wave, what do I call it? Chapman Wave Dow Index, the Quartet Index. That's GE, IBM, Triple M, and UTX. It was one of the best days that it's had in a percentage gain in a long time. Just a fabulous day. And of course, today, giving back some. We're going to talk about that as well. So let's just continue, because I want to just quickly show you the QQQ. Put it over here. The QQQ, that's the NASDAQ Index 100 trading vehicle, is making that H pattern. This is not good. Not only is it not good, but you've got, this is not really a Chapman Wave Roman candle from 3 weeks ago, but definitely you've gone halfway into the body. You're below that now. It ain't good, and you're looking at leaders. Remember we spoke about that? How the rotation takes place, the rotation within sectors, the rotation within previous winners becoming losers, Amazon, etc., AMZN. Look at this, Amazon down 32 at 503. Just the other day it was at 696. That's a 200-point decline. I would say that 200 points from 700 is 27, 28%. That's a big pullback, and many of the others are looking the same. Let me just move this 120-minute chart so that you can see my concern here is that the monthly chart has gone under the 9-period moving average for this month, but the month is only 6 days old, only just a few trading days old. But look at the weekly chart. It's about to test the low of October, the week of October 2nd, where the low was 490. Not very far to go. And the MACD and stochastic are very poor, and the daily MACD and stochastic are very weak. Let's go on. IWM hasn't quite gotten the same velocity to the downside, but it's still not a pretty looking chart, especially that monthly. That is a Roman candle. We are trading 1 week into that middle of the wick. Not a good sign. Interesting. Let's go to gold. Gold has had one of its best weekly moves to the upside in a long time. It's had a couple of these. I would say it's one of the best weekly moves with the gold stocks. In fact, some of the gold stocks have been absolutely stupendous to the upside. We own one in my opening call, and it's just it's way. We got it at $3.96. It's trading at $4.40. I mean, that is really nice action for just a week or so's work. Okay, let's just go on. We've got silver, right? So gold is up. No, sorry, gold is down 360 at 1153. This is leg E in the daily, but the MACD is strong. The stochastics at 94%. On balance, volumes turned down, but the weekly chart is looking great. It got repelled. Remember, I spoke about this yesterday. I drew it in. I said that trend line right there is what we're going to be watching. It's what what's called in the Chapman wave methodology, the inside track resistance. Let me just do a couple more things. Then I want to go to our caller from yesterday that I didn't get to. So let's just go on. Silver at this particular point, silver is down 6 cents at 14.79. Also a leg E. So there could be a bit of a pullback here. Maybe as the dollar is trading at 97.17, up 69 cents. Nice inside bar so far. Yep, it's due for a bounce from that 200-period exponential moving average. But the weekly chart is saying, you're gonna have a bit of a timeout here, so don't get too carried away. The final two things is crude oil. Crude oil is trading right now at 31.84. It's in this range. As I say, it's time that it could have a bit of a bounce. I think it's going to be dragged up as the other commodities move higher. It's not my favorite. I think the best one right now is definitely the gold contract. Now let's just go on to the one thing that we're missing, and that's the TLT trading at 127.71. It is down 86 cents, and it's holding above the 9-period exponential moving average at peak E in the daily, leg C in the weekly. This is an overlapping C, and this overlapping C says you should still go to a D as well in the TLT. Good for bonds. I'm going to go straight to Ben in Tallahassee. Ben, thank you so much for waiting, and sorry about yesterday. How are you?
No problem. It probably does more harm than good when you rush through things. So
right.
I'm looking at UTX, Triple M, and Caterpillar, and they barely flinched. In fact, CAT is up right now. So I'm looking at this, and the Dow looks to me very healthy. Like, I think it's going to make that peak D for those reasons. I guess my ultimate question is when you have really the Dow is the only good-looking chart, the way I see it, between the NASDAQ, the S&P, and the Dow. When you only have one looking healthy, historically, have you found that one can typically still make that peak D based on a good stochastic, or do you find that the other two can easily drag it down?
First of all, you've made some very good observations. Everything that you're discussing is what I had mentioned this morning for my opening call subscribers, and I was mentioning about the GE, IBM, UTX, and Triple M. Let me just, and you've added Caterpillar. Now, my guest artists for the little quartet that I have, over the years, I haven't needed them for a long time. I might include them as guest artists, and that's Caterpillar and DuPont. And there's a couple of reasons for that. Look at, whoops, I keep hitting the wrong thing. GD, there's DuPont, hasn't flinched, up 25 cents today. This is really important. Let me just go through. GE had an absolutely fabulous session yesterday, giving back a chunk today, down 49 cents at 28.69. But the stochastic and MACD are actually holding very well. The weekly chart is what has me a little bit concerned. We actually add a little bit. We're in and out of this periodically. I prefer to actually use it just as an indicator stock. But there are a couple of things here that are telling me that GE has the potential to hold support in the 26s. I hope it does. More importantly, if it happens to start a move next week that takes out peak C, which will be 29.46 from yesterday, that's going to be very nice action on a shorter term basis. Do you have time? I know sometimes you have to rush. Do you have time today?
Yeah, I do. I guess the ultimate question is, does one main indice in a peak C that looks good, can it usually finish D based on that, or the other two typically drag it down?
That, to me, is the first part of the question. I'll get to the second part that I think is even more interesting when we get back. We'll be back with Ben.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global valuable perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So we're on with Ben in Tallahassee. We're looking at the Dow. The questions, this is a great question that Ben asked. I'm beginning to sound like, what's his name, Sanders, who has every single question he says, that's a very good question. And it is a good question. So we've got United Technologies bouncing very nicely from under 84 to over 87. It's at 87.80 right now. Not such a big deal, 3 points, but three important points because it's already gotten to a D, and D is where you expect the biggest pullback could occur, and right now it's only down 32 cents. But it's that weekly chart that has me worried. The monthly chart is starting to improve a little bit on price, but the technicals are very slow. So that's UTX. So it's already gotten to the D. You've got a Triple M, which had a huge W formation in the weekly chart, does point to higher prices. It's made a peak D, but this peak D is completely different to United Technologies' little mini. This went from 134 to 154. I'd say 20 points in a move like this is really good action. It's about 15%. And now what we're looking at is it's holding very well. The MACD is at 91%, and the stochastic, the MACD is strong, and the stochastic is at 91%. I love that. We're looking at G, as I mentioned before. The weekly chart, the daily chart is good. This is a little deeper at 56 cents down than I wanted. I really wanted no more than 28.70s, and now it's in the 28.63 area. So I'm a little concerned here. That the difference is that I think the weekly chart is going to be the big clue next week, because if GE closes under 28, it's going to make it very difficult for the Dow to get that extra push to the upside. At the same time, if it's able to climb to 29.30, that'll be really nice shorter-term action, short to intermediate-term action. And let's just go to IBM and say IBM is also holding very nice. ABC, this is peak C, and it's down $1.04 at 126, but it's holding very nicely. The weekly chart is starting to improve. Now, to answer your question, an expression that I've used for years and years. I've used it ever since there used to be three generals in the Dow. Is that the generals can't lead without the soldiers. That's an old-fashioned term because who knows what you do today in the military because you're using all these different technologies. But that kind of says it all, that you can't have leadership without the troops following. So it's really important for the Dow by the end of the day not to suddenly double down and go into the minus 250s to the downside, but to try to find some support for whatever reason. I might have been the announcement of the job situation this morning. Whatever it is, I'd love to see the Dow close above 16,276 is the 9-period exponential moving average. It's not a big deal to move 50 points up from here. It shouldn't be a big deal. If it's able to do that, then I'm going to say to you that by probably Tuesday, certainly not later than Wednesday of next week, there should be a rally that takes the down. And let me explain what it is. 16,550, 16,510. Yeah, 510 was peak C. So up until yesterday, it didn't have very far to go. It was a 16,485. 30 points and it was there. So all of a sudden we're down, and this is what's been going on with this market. So to answer your question short term, it would not be unusual for the leading index, in this case the Dow, to actually lead the pack and to get to that new recovery high. It's got a lot of work to do, and I can just tell you this, that if it closes under 16,000 before the next time we talk, that's not going to be a good sign at all. Closes below 16,000, especially if it does it for 2 days in a row. That would make the arch formation in the daily and start to impact the weekly chart negatively to the point where I'd say the 15,876 level, the 200-period moving average, should be a support. So answer your question number one, yes, if we're able to improve by the end of the day, maybe get another 50, 60 points to the upside from here so that we can get closer to the 16,300 level, then I'll say it might be choppy, but I'm expecting that we will make that leg D. The strength of leg D is going to be really imperative to answer the second part, my part of the question, because if the Dow is able by Wednesday, next Wednesday, at the close next Wednesday, to go anywhere into the 16,620s, all of a sudden, my weekly chart is looking much better because the 9-period moving average is at 16,628. And all of a sudden, I can say, hey, it might be a struggle, but we are slowly having a rotational correction as the fund managers are moving in and out. They're not terribly sure what to do, but they're trying to find some other area of safety. And the safety might be in those stocks that I've been talking about for a week now. Alcoa holding beautifully, U.S. Steel. Why would these really heavy industrials be acting like this? It's not just an oversold bounce. I think there might be something going on, and it could be that China has started to spend again, and maybe that's why Caterpillar is bouncing. That's why you've got some of the commodities. That's why high-grade copper. So this could be a temporary lull in the bearish action. And it could be maybe, I don't know how I'd be able to prove it, other than through these stocks and the commodities, and say maybe China's doing some buying. Let me just look at the FXI. So FXI doesn't look too good. That's the iShares, the China 25. And if I go to TJSH, then no, dollar, TJSH, that I believe is Shanghai. Shanghai is also not so great. So I don't know how to explain it, but I think that this rotation is a very big part of what we're seeing right now. Is there another part to your question, Ben?
No, that's it, Basil. I was just, when one of the main indices looks good was stochastic, and you're in, you've already established the peak C. Have you found that usually finishes the peak D, or with the others poor, do they typically drag it down? Was really
a real simple thing is that if peak C starts to fail, peak C minus invariably takes you to the previous low and then underneath it. So just to go back to the numbers I'm looking at, that's why I'm saying 16,000 will be really important, even though the low is way down to 15,459. This is this is a very important moment. It looks sideways to me almost every other day, where every second day you get a very sharp pullback and then 2 days up. And mostly we've gone to higher highs and higher lows. We've kept that for now. I'll just make it real clear right now. The low of 3 days ago, 15,960, watch out. A close below that says, uh-oh, rolling over. So I'm trying to make it as easy as possible.
Good. Thanks a lot, Basil. Have a
Thank
good
you,
weekend.
Ben. And it's a good question. And no, one index cannot lead all the others, but it can help. And that's what we're looking at. Let's go to Bill in Orlando. Bill, how are you?
Fine, Basil. How about yourself?
I'm well, thank you. You'd like to look
I'm
at?
looking for an entry into the Bull Pharmaceutical LABU.
So is that the biotech? I think that's the biotech, right? Direction share?
Yes.
Yes.
Mm-hmm.
So let's look at the IBB if you don't mind. So
Okay.
the IBB had a low of 250. IBB is the iShares of the NASDAQ Biotech ETF. The monthly chart just absolutely looks like a 1-to-1 to the downside, 400 down to 284, and the recent high of 340, 342, 343. So you take away 120, and we've got, what do we have? 120. So now you've got 220 something, and that's kind of my target for the looking out longer term. But it's worth looking at now because it's sitting on the 200-period moving average. Can you hold on, Bill? Oops, you dropped. But if you can call back, I'd appreciate it. But I will talk about it in a moment. I'll be right back answering the question on the IBB.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And we're back. I believe that Bill in Orlando's... Bill, are you back yet? All right, Bill from Orlando wants to know about the LABU. That's a highly leveraged long on the LA. Let me just see what the exact title is. I want to give it to you, LABU. And the LABU is the Direction Shares Daily. Oh, it's the S&P. DX Daily S&P Biotech Bull 3 times. So daily, LABU. Daily S&P Biotech. Yeah, okay. So that's probably based on the BBHs. So let me just real quickly say, in the IBB, IBB, because we've got a bunch of callers here, so I just want to go through this quickly. I would wait one day, and I'll tell you why. The low of 251.63 just nicked the 253 level of the 200-period exponential moving average in the weekly chart of the IBB. What I said to subscribers, since we've been short from the 391 area, the high is 400, that I want to maintain that short position because I've got a target in the 220s, and then I'll decide on what to do. But in the meantime, I'm looking at playing the long side, just like you are, Bill. Give it a day. Let's see how Monday and Tuesday holds out. Give me a call, maybe because you dropped off. Maybe you can call me Monday or Tuesday. Let's look at it together. It's a start. But if you're looking at Gilead, you're looking at Celgene, you're looking at BIIB, I would just say to you, they do not show any signs right now of stabilizing in the daily chart unless they can hold really nicely without taking out their recent low. And that recent low would be on the 20th of January. Whatever their low was, they have to, if they start to close two or three sessions below that low, I'd say hold off completely. But if we start to see some, by the end of the day, if we can see a bounce in the market, I say, you know what, we might be ready for an oversold bounce, and then you can do it. But just leverage, you got to be real careful. I would prefer to see you in the 2 times, which is not quite so leveraged, the BIB, or even just short the or even just buy the IBB. You don't have to get carried away. Wait until there's real evidence this is a bounce of substance. So hold off. We'll talk about it next week. Let's go to Scott in Safety Harbor. Scott, how are you?
Well, how do you think I am, Basil?
Well, I'm going to take a guess, and I'm just going to say you're on the upper side of very, very, very good.
Yes.
Okay.
The Alcoa went better than expected.
It was great. Yeah, Alcoa, you're talking about it really, even now it's looking fantastic. It's at 837. We were talking about it back in the low $7 area. Good. Now, what are you doing?
And you know that I was also on that other little sleeper out there by the name
CX.
of CX.
Yeah, CX is the
I
cement.
must have got 15 emails about those two. Thanks from different people that I know who follow my recommendations. But now I'm out of both.
Good.
And looking for another entry point. And it's really tough on both of them because they're just sort of. Well, let's see what the charts say.
Okay, so as far as I'm concerned, the fact that you're out is not a bad thing, although they're still holding very well. I think you're going to get another entry point Monday or Tuesday on CX. The way I look at it is at 512. It hit a high yesterday of 542. And at this particular point, I'd say any move below 5 into the 490s, and I would just start a small position. Don't get carried away just because it was so good. Start a small position, and then if it starts to move up, just like we said on Alcoa, starts to move higher, you add to it, and here again, nibble on it. I don't know if you look, you just got out of your good trade. Don't just dive back in. Give it a day, let the weekend settle, and see what happens on Monday. And if it pulls back a little bit, I would start a position. I'm looking for a leg C above 542. So I hope that helps you.
What is your take on Alcoa at this point after a huge move like that? It's just
I love the action of Alcoa. I was going to put it in today as a buy. I didn't do that. Of course, I'm upset because it did pull back, just like I wanted to. The moving average support is 788. It's trading at 837. It's looking really nice right now. This is one I would actually nibble right back in. I'd nibble right now because it's held so well that it could actually pop on Monday to the upside. Somebody's going to recommend it over the weekend. But don't get carried away. You've got a really nice profit. What?
Here's something interesting, Basil. The conversation that you and I had 2 or 3 days ago about Alcoa was like a carbon copy of an article that came out yesterday on Yahoo Finance. Our whole
really?
conversation about the hedge funds, the strength, everything that you and I said, they must have been
Well,
listening.
if folks listen to TFNN, they're always ahead of the game. That's the thing.
Basil, you're the best, and we make a good team, and it's I'm right 100% of the time, and you're right 99, so you can't beat that.
I wouldn't say that, but thank you, Scott. And hey, congratulations. You really had the courage. You did it. You knew exactly what you wanted, and you got it. Congratulations. Good luck on the next one.
And nobody out there in radio will fall in love with one of these stocks. Everybody, they're all different. Tomorrow I can be back on Gilead. Don't fall in love with these things.
That's absolutely true. Hey, have a wonderful weekend. Thanks for calling and letting us know, Scott.
Yes, bye-bye.
Bye-bye. Let's go to Jerry in the Back Bay. Jerry, how are you?
All right, how are you?
I'm well. So you've been looking at EDV for a long time, Vanguard Extended Duration. At the time that we spoke. Yes?
Yeah, I think it's in sort of a fruition phase.
Right, and when we spoke about it, Jerry, it was in about 121 to 122, and if I remember correctly, I said I recommended that you start or you add to a position at that particular point, because both of us were looking at a good chance that yields would be coming down and this should be going up.
Yeah, and my analysis of the economy is that things are going to not look too good in 3 or 4 months.
And nothing has really changed in your opinion. So let me just do this. I've got an E/C in the daily chart. It is holding really well. EDV, folks, this is Vanguard Extended Duration trading at 124.11, down 64 cents. Now, what I like about this is that there's a cup formation, and that cup formation is a dual, it has a dual implication. One is on the weekly chart, there's like a U-shaped cycle that seems to take a certain amount of time, I'd say 6 to 8 weeks, and it keeps making the U-shaped pattern, and then it hits a certain level, and then it pulls back. In this case, I'm looking at the high that was made in the weekly chart in March, and that was at 132. It pulls back sharply to the 200-period moving average. Then it comes back, and it goes to a high of 127.72 in August, pulls back, makes a cup formation, and now it's testing that level. If the EDV is able to challenge that 127.72, you know how we like to talk about probing for a base? And this, in this case, it's probing for resistance. And if it's able to pierce, I think it might have a tough time in the shorter term, but if it is able to pierce the 127.72, I think you're absolutely right, because that's going to suggest that the economy is even weaker. And in the den, we had Peaky mentioning DHA, was it DHA? Uh-oh, am I going to find it? If you can type it back in there, because I'm bound to, I can't find it. But he had mentioned one that was a good economic barometer. I said my one is CTAS, which is Cintas, and it's having a tough time here. That's overalls and clothing rentals. If you want to hold on a second, I'm going to have a look at the bonds themselves. Do you want to?
Yes, thanks.
Okay, great. We've got Jerry in the Back Bay, calls frequently, and we've got EDV we're looking at.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So what we're looking at here is EDV, which kind of parallels the TLT at this particular point. Now, Jay, if you're looking at the chart, you would have seen daily, weekly, monthly, 120-minute chart. And what we're looking at now, this is very important to me. If the TLT continues and breaks out, and that's the same with the, if you don't mind, Jerry, I'm just going to go to the TLT for a moment.
I understand. I totally understand, yeah.
So the TLT made a high on the third, of course, being 2 days ago, at 129.94. If on Tuesday at 3 o'clock to Wednesday at about between 10 and 11 o'clock on Wednesday morning, the TLT is pushing into the 130.50 to 131 area, I would not be surprised to see that the Dow has taken out the 16,000 support. That's kind of the way I'm looking at it right now.
Sure.
So I would not be surprised if there is going to be a turnaround. It has to be later today, maximum Monday morning at this time. The Dow has to be getting back a chunk of whatever losses there are today. So I'm looking at this and I'm saying, you remember we had the question we had from Ben in Tallahassee, could one indicator, one good index or index that's really leading, especially since it's only 30 stocks, lead the market? Absolutely not. For a short while, it can. Now, this is the other action that I'm looking at. The VIX, I'm going to make it as simple as possible. I want to put the package together. Now you're looking at for Friday afternoon, if there isn't a really sharp turnaround in the market, you've got the VIX weekly chart above the 9 EMA. You've got the daily nicely above the 9-period moving average, and it's way above the weekly 200 moving average at 17. I have to respect that and say that up until now, one of the reasons why the market hasn't continued its upside movement is because of the intense selling of fund managers buying the VIX as insurance. They are buying it. I don't know if it's showing up in the volume. Let me just have a look here. I don't get volume. I do get volume on the TVIX, so let me check that one out. 15, 30, 48, 35, 40. Yeah, there's quite heavy volume, not that much, but it's heavy enough in the volatility index. So I'm just going to make it simple, putting it together as a package. The VIX index at 2332 closes the day in the high 23s with the market down 250 points or more. Not good at all. If, in fact, there's a turnaround later in the day, now I'm not sure what could actually do that. So looking at the chart of the TLT, if the TLT at 120, it's down 41 cents. It should really be up a little bit based on my usual mirror image. There isn't an exact parallel.
The market's confused today. If you listen to interpretations of the employment report,
yep,
half the people say it's favorable, half the people say it's unfavorable, depending on which of the data that you pick out of there. So the market's confused. You got the bond down and the market down. That's not the way.
But you have got the market down, and that's the end result is that the proof of the pudding is that the market's down and people are selling. I didn't have time today to do Wither the Golden Age, written by Jeffrey Sachs. It's got a number of statistics here that I think are important. I'll try to bring them up in conversation next week. But let's make it real simple. If the bonds go much higher and the TYX.X, the 30, whoops, I missed it. The TYX.X, I wonder if I got it this time, is moving. All right, for some reason I'm not getting TYX.X. Oh, stumbling fingers today, huh? Must be a reason for that. All right, I'm not getting it. But if the yield is, let me go to the 10-year. Maybe I can get that. There it is. Okay, the 10-year is trading up 4 cents. Well, as far as I can tell, at this particular point, let me just get rid of these mistakes that I made here. Remove, and go back again. There it is. Okay, so yields are going to be very important. So let's just make this real clear. Dow under 16,000 in the next 2-3 days, I don't like that action at all. A reversal later in the day with the Dow getting back to the 16,300s, I'd say, okay, not great action, but way better, and enough Dow stocks are saying there's enough room to go a little bit higher, and then we'll deal with it. But as far as let's go to the TLT, it's really important at this particular time to say that the support is between 126.5 and 125.80. That's the area I'll be looking at it real closely. If it closes underneath 120, certainly if it closes under 126, I'm going to say, I'm going to be watching very closely the weekly chart, just in case there's some kind of a pullback, but I still think it'll be shorter term. In the meantime, I don't think the Fed can do anything about raising rates. I think you're looking good there. Hope that helps you, Jerry.
Yeah. I look in terms of months, so I'm thinking like the EDV going to 130, 135.
If I'm looking at months, I'm anticipating that there is a very good chance that the TLT is going to test the high of March, which was 132.70. Of course, if it even gets close to that, we're talking about a potential double top of 138.50 that we'll be looking at. But I'm just going one step at a time at this point.
I know. Okay,
Thank you for calling, Jerry.
That's my parameter, that type of thing. Thanks a lot. I appreciate it. Very helpful.
My pleasure. Thanks for calling, Jerry. Have a good weekend. Let's go to Bill in Boca Raton. Bill, how are you? Hi, Bill. Bill, you there?
Yes, I'm here.
Great. Okay, you'd like to look at?
USO.
Do you have a position?
Not right now, but I was thinking about getting in and maybe selling some covered calls.
So the way you would do it is you'd limit your upside with the covered calls, but at the same time you're expecting some kind of a bounce that should take it above the recent high of 988. Is that kind of the way you're looking at it?
Exactly.
Now, are you looking at it more as an intermediate term trade, or is this?
No, I was thinking about selling the, February 24th call?
So this is shorter term. Okay. If you're going to do that, I'm going to ask you, if you don't mind, at 9:05 right now, it's down 8 cents. The chart pattern I'm looking at, I just want to go here, if you don't mind, USO. I just want to double check on my Chapman wave parameters here. USO. You see, I have a lot of resistance, excuse me, at 927 on the daily chart, 914, 919, and 928. On the 10-minute chart, and I have just two support levels, 844 and 762 on the daily, and 888 on the 120-minute chart, on the 10-minute chart. 893 is on the 120. So if I try to package the whole thing, it's saying to me there could be upside, but it might hit a bit of resistance unless it's just something that happens over the weekend that really spirals crude oil. And on the downside, the USO, United States Oil Fund, I see a lot of support at the 844, at 888. I don't want to take 5% risk on the downside when, in fact, my upside is maybe 5%, 3%. So let me just do this. If you're going to look at it, give me a moment here, because I'd like to also look at the crude oil at the same time as the USO. There are a couple of things I want to do, because you're talking about a trade that's going to expire very quickly. And I would rather know that I can give you something for Tuesday to Wednesday, and that makes me a little bit more comfortable. So hold on, Bill, can you?
I can do that. Thank you.
Great. We've got Bill and Boca Raton. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Dow's down 166, trying to come back. Oh, ho, ho. Very interesting. S&P's down 28. Just real quickly, we're on with Bill, and I just wanted to do this. Whoever keeps, I don't see the name, but I keep seeing the text message from your phone calling me, asked me, can you pull up a chart of Tesla? I've got a feeling now that you're on the wrong side of Tesla. Get out. I said yesterday, I think 2 days ago, 3 days ago, I don't know what it is, that be careful, that 171 was my target. That's my suspicion. Just I've been in the business long enough to get those vibes. I think you're on the wrong side. That's why you keep asking me about a stock, unless you're short. And if you're short, stay short. But boy, don't hold this. This is going down. Looks ugly. All right. Sorry, Bill. We're back.
That's okay.
So what I did is I looked at the crude oil. I looked at the different time frames. I'm going to make a suggestion here. And the dollar is rallying a little bit. I think the dollar has another day on the upside, maybe a little bit more. And then I think gold, we'll see whether dollar pulls back and gold and the commodities start rallying again. Just on a short-term basis, I've got a feeling that that the crude oil is not going to be a leader, and if it's going to be a follower, it's going to need gold, instead of being down a few points, to be up a little bit more. So I know that you'd like to put the trade on, but I'm going to ask you if you could wait a day. I'd actually prefer to see you put the trade on when the USO is not at 903 or 890, but more towards the 915 to 923 area, and that'll say to me, aha, strength is coming back. I'd rather be buying strength, because then you've got yourself a nice trade. Otherwise, I just don't see the real point of it, because it's going to cancel one's going to cancel out the other. So if you don't mind, and since this is a timely thing, if my engineer doesn't mind, you can call back on Monday. We can look at it again. I'll actually look at it on Monday. I'll put it down here to make a note of whether or not you call. But I'm going to say hold off on the trade. Even if you miss a good opportunity, I think that I would prefer not to do it today. I'd rather do it on Monday.
Yeah, I'll tell you what, I was thinking about Monday or Tuesday anyway. So.
Okay, great. Okay, the longer you can hold off, I think the better you're going to get for premiums, and the better you're going to have an opportunity if it's going to pop at all.
Thank you, Basil. Have a great weekend.
You too. Have a great weekend, Bill. So let's do this, folks. Just a quick recap. Oh, that was a Tesla. The other one was, Data. Data got smashed yesterday. It's in that group. Look at it. Down 38 points. Down 47%. I have to tell you something. That's the reason why I'm kind of impressed with this market, because all those huge declines that we saw yesterday, big percentage moves on. What set of data? What was the stock? Can't remember right now. It was down huge. All of this is saying to me that there is internal strength, but it is very selective. Look, our telephone that we bought in the 34 area is at 36.67. It's holding nice. It's in leg E. It's going to come back for sure. 36 would be the support, but this is nice action. The gold stock that we had, NG, trading at 443. We got in at 396. So you've got to be so selective. And we're just trying to play the indices for the other moves. Now, we did take a particular position in one of my key stocks. Why? Because I think it's acting kind of well. I think there's insider buying. There's a whole bunch of things that are maybe fundamental as well as technical. And it's part of what I'm expecting for the leg D, if it's going to happen in the Dow. But this is the time to be absolutely so selective. I just don't see any reason to be going out on a limb at this particular point. But if you have a stock like an Alcoa, look, there it is. From the time we spoke with Scott, it's now up 13 cents at 8.44. There are some stocks that are doing really well. So let's make it real clear. The volatility index as we sign off, folks. Have a great weekend. Stay tuned for your swimming lesson and all the other great shows here. I want to see the Dow closing more towards the 16,300s than the 16,200s at the end of the day. And I'd like to see the VIX pulling back. Looks like it's not going to give a great candle for the weekly chart. Hey, check out my opening call. The charts will be coming out over the weekend. I'm going to be sending through a lot of charts. And I hope to see you Monday. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.